Hello, determined trader, and welcome to the Red Hot Storm Trader Pro Trading Tip for the week. So as you can see, we've had 6 winners in a row. You could have had profits of 10,287, which means that you'll be putting in more money per trade, where you'll be risking a little bit more, but you'll be also making more. So we've had 7 winners and 2 losers with a win rate of 77.78% for the first quarter. Today I want to go over a trade with Sasol where we got in on the 4th of March and we got out on the 7th of March, but I saw something very important that I want to show you. We're looking at Sasol CFD chart on a 4-hour time frame, so you can see exactly what I saw. And what happened was the market moved up on a strong trend. It then formed some type of pennant formation. Remember, a pennant formation is when the market corrects itself within a month. Anything more than a month and it becomes a wedge pattern. So I sent out a trade idea to get in at 366.68 Rand with Sasol because I saw there was some type of hammer formation, and a hammer formation is a candle formation where the buyers and sellers are at a row with each other. They're not sure who's going to win. But looking at the volume and looking at a few indicators using the multi-trader system, it looked like upside was to come. So we got in at 366.68. We put our stop loss at 330 Rand, which is our risk level in case the market went against us. And I put my take profit at 421 Rand. Then 1 day later, the market gapped up, not past our take profit, but it gapped up quite extensively. This is where I raised my stop loss from 330 Rand all the way to 396 Rand and 80 cents. At the time, it was trading at 399 Rand. But the reason why I did this is because of one very important reason. Gaps close 70% of the time, which means that when a market gaps where there is a price that hasn't been taking place between the highest high and the lowest low of the next candle, it means that there is a high chance of the market coming back down to close the gap, which is exactly what it did. I wanted to protect the profits and I wanted to get out. So instead of it hitting my take profit, I moved my stop loss up. It hit 396 Rand and 80 cents. I took the profits and I ran. And look at what happened the next couple of days. It just went straight back to the entry level and continued down and would have hit the stop loss. And that is why it is important to follow certain strategies and rules for when this happens. When a market gaps, you know that you need to protect your profits and preserve them instead of hoping that the market is going to continue up. A gap up is where there is too much emotion in the market, when the buyers have overextended themselves and then fear kicks in, which drives the price back down. So that is a very important lesson to learn for today. I call this the hammer gap, where a candle formed with a hammer, then it gapped, and then obviously we protected our profits by moving the stop loss up. If you want more of these important lessons and tips, these are tips that you're not going to find as a normal trading tips reader, because I only want to send out the most valuable and information content to those that I know are extremely passionate and dedicated to actually making a difference with their trading and taking their portfolio to new highs the realistic way. So I hope you enjoyed this video. Don't forget to like, share, and subscribe for more videos just like these.